Today we're going to be going over 3 common mortgage mistakes I see time and time again that's costing people thousands of dollars. So be sure to stick around as you're going to want to make sure that you're not making these 3 common mortgage mistakes. Hello my friends, it's Tom here from Off Mortgages. Thanks again for tuning in. It's always a pleasure having you here joining me. Please hit the like button, hit that subscribe button, hit that bell icon. That way you don't miss videos like this in the future. And you're gonna help grow this channel so more people like you can see this. My journey, my goal is to help educate people with mortgages in general, help people build wealth through real estate. So that's the whole goal here behind the channel. So please hit that subscribe button. Again, it's gonna help me grow the channel. So I hope you like this video and there's more to come. So being in the mortgage industry day in, day out, I do see some ugly things happen time to time again, unfortunately, specifically to borrowers and people that are obtaining a mortgage. So my goal specifically with this video alone is to show you 3 common mistakes that I do see from time to time again with borrowers specifically getting mortgages. And these mistakes end up costing them thousands of dollars. So I hope that this video ultimately saves you thousands of dollars by avoiding these mistakes. So mistake number 1, rate tunnel vision. So when it comes to getting a mortgage, people unfortunately aren't really educated enough to ask the right questions. Most people are only concerned with how low they can get their interest rate. How I see that is the person that's trying to get the lowest interest rate is ultimately saying, I want to save the most amount of money. Now the problem is that person that is locking themselves into that super low interest rate, they may be locking themselves into what's called a no-frills mortgage. So what these mortgages do is they can restrict you from doing certain things. So for example, a bona fide sales clause simply means that you cannot break that mortgage unless you sell your current property. So let's say you locked into a 5-year fix, whatever it is, you locked in with lender A, and 2 years from now you want to refinance, whatever it may be. Maybe you want to consolidate debt, maybe you want to take equity out and purchase a rental property. Well, locking into that product, that no-frills product, is basically saying that you have a bona fide sales clause, you cannot refinance, you can't restructure your mortgage unless you sell your property. Now, what does this do? Well, if you are trying to consolidate high interest debt, you're obviously going to be spending thousands of dollars keeping that high interest debt on your line of credits or your credit cards versus consolidating that into your mortgage. Well, you can't do that. You can't consolidate into your mortgage because you have a bona fide sales clause. Maybe you want to purchase a rental property. We all know the power of real estate, and buying and holding a rental property for 10 years might yield you $1 million. Who knows what the appreciation is going to do? It's going to at least yield you thousands of dollars. Well, if you don't have the opportunity to take that money out from a refinance, well, you're ultimately costing yourself thousands of dollars again. So obviously this is getting me a little fired up because this is one of my pet peeves is people come in, they think, I want the super low interest rate because all I want to do is save as much money as possible. Well, the problem is they were never educated to ask the right questions, and it's not their fault. It's just the lack of education in the mortgage industry. However, I do see it getting a lot better over the past 5 or so years. So we are heading in the right direction. However, that is the number 1 mistake I see with borrowers is they get the rate tunnel vision. All they want to do is get the lowest interest rate. So mortgage mistake number 2, obtaining a fixed rate with a big bank. So before I go into this topic, if you haven't seen my video going over mortgage penalties, I definitely recommend you watch that video into its entirety because it'll give you a good basic foundation of what mortgage penalties are, how they work, and what sort of products and banks are going to cost you the most amount of money. So as I've mentioned in previous videos, going with a big bank for your fixed rate mortgage is a big no-no. The reason being is when you have a fixed rate with one of the big banks, their IRD penalty, also known as the interest rate differential penalty, is the absolute highest when it comes to breaking your mortgage versus going with someone like a monoline lender. A monoline lender meaning someone like First National, MCAP, those are monoline lenders. They are lenders specifically loaning out money for mortgages. They don't have the checking accounts, the saving accounts like the big banks. They specifically deal in mortgages. their penalties with fixed rate mortgages are severely lower versus the big banks. So with monoline lenders, typically the penalty is going to be around 1% of your mortgage balance. That's not a given set in stone number. That's just typically what it ends up falling around. It also depends on how much of the term you have left in your mortgage and how big your mortgage balance is. However, let's go with the $400,000 mortgage. Typically with a monoline lender, your IRD penalty is going to be roughly 1%, which is $4,000. With a big bank, you're going to receive that high IRD penalty, which typically rounds out to be around 3 to 4% of the mortgage balance. So in that example of the $400,000 mortgage, you're going to be paying around $12,000 just to break your mortgage. So to conclude on this point, if you're someone that just loves the fixed rates and you love that stability, well, definitely veer towards going with the monoline lender. However, if you are someone that would entertain the idea of getting a variable rate mortgage, well, you're always going to pay 3 months interest on a variable rate mortgage. So if that's the case, then you can go with the big bank such as Scotia, TD, CIBC, because you're always going to pay that 3 months interest on the variable rate versus that high IRD penalty with the fixed rate. However, if you are someone that's going with that variable rate mortgage and going with the big bank, make sure you're all in, because the last thing I'd want you to do is have a little shred of doubt thinking that maybe if interest rates rise in the near future, you might have some doubt in mind of keeping that variable rate and you might want to lock into that fixed rate. Well, if that's the case, please just go with the monoline lender, because if there's that bit of doubt in terms of you maybe locking into a fixed rate in the future, well, you want to make sure you're locking into a fixed rate with the monoline lender. You don't want to lock into a fixed rate with a big bank because of that high IRD penalty. So for me, I know I'm always going to stick with variable. Doesn't matter where it goes in the future. I know that variable outperforms fixed rate over the course of history. So I know I'm sticking with that variable rate payment. But if you're someone that just doesn't like the fluctuations of payments and it does cause you stress and you know that you might lock into that fixed rate in the future, definitely stick with the monoline lender. Okay, so that brings us to our last point. Point number 3, get a proper pre-approval. If there's one thing to remember from this video, please get a proper pre-approval from a mortgage broker before you go out house hunting. And yes, I said specifically get it from a mortgage broker because their pre-approvals are legit. And in my opinion, if you get it from a bank representative, their pre-approvals aren't always foolproof. So you definitely want to make sure you get it from a qualified professional. No hate to the banks, it's just, they deal with a lot of other products and they're not as educated as mortgage brokers. I know I'm going to get some hate from that, but hey, I want to look out for the best interest in you. So get it from a qualified mortgage broker. They're going to give you a proper pre-approval. Then you can go out house hunting. So why do you want the pre-approval? Well, with the pre-approval, your mortgage broker is going to confirm that your income checks out, your credit checks out, your down payment checks out. All 3 of those things are vital in order to get qualified for a mortgage. So the mortgage broker, he or she's going to be collecting all the appropriate documents, checking your credit, making sure that you are employed and everything checks out with your employment. With those 3 things in mind, they can come up with your approval amount. So they can give you, say they come back and they say, hey, you're pre-approved for $500,000. Then you can go out shopping for your house knowing that you will get approved for a $500,000 purchase. Now let's say you didn't get a pre-approval and you went out shopping with your realtor and you put in an offer without conditions, because that's how the market is today. Everyone's going in without conditions, just how it is. Let's say that happens and you get your offer approved for $550 and you're really only qualified up to $500. Well, you're gonna have to come up with that extra down payment. And you may not have that down payment saved up. Well, hopefully you have a backup, because if not, you may have some issues coming out. So you definitely want to get pre-approved before going house hunting to avoid some of those issues going forward. If you're not sure what a proper pre-approval looks like, be sure to check out my video down below where I walk through the whole process of what a pre-approval looks like and what the person should be asking you for, in terms of documents. They should be looking at your income documents, your down payment. They should also be checking your credit as well. So check out that video. I go into it in more depth. And that's it for today's video. I hoped these 3 common mortgage mistakes save you thousands of dollars in the future. And good luck with your house hunting. That's it for today. I'll see you on the next one. Cheers.